Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 37, which is a crypto instrument this time, Harmony, or also known by its symbol 1. If you aren't familiar with this series, don't worry, I'll make sure to attach the entire playlist, which includes all the videos by order, in the description below. And I also attach my Telegram channel, where I forward the analysis and videos from TradingView and YouTube in case you want to get notified. So let's do it. For those who already know, we always start from the higher time frames, which we call our rejection time frames, daily and weekly, to know where we stand in the market. Are we overall bullish, bearish, or stuck inside the range? And as price approaches the lower bounds that can be non-horizontal or horizontal, we'll be looking for buy setups. Vice versa, as price approaches the upper bounds that can also be non-horizontal or horizontal, we'll be looking for sell setups. We've got three types of rejections: a non-horizontal supply and resistance, as mentioned previously, a horizontal or typical supply and resistance, where we have many failed attempts to break above or below a certain level of area. The third one is a supply and demand zone. So when we have an aggressive movement downward from a certain base or area, it is a supply zone, and as price approaches it again, we'll be looking for sell setups. Vice versa, if we have an aggressive movement upward from a certain level or area, we have a demand zone. Just like now, we'll be looking for buy setups. So let's do just that and identify our three types of rejections, and then half of the work would be done from daily and weekly time frame. Then we'll zoom into lower time frames to look for setups. So let's start with our weekly time frame, and let's start with a support and resistance. The way to do it is very simple. You simply draw a random line on your chart and drag and drop it in a way to connect as many swings as possible. Of course, first of all, we'll keep this one because it's the all-time high. Let's go for 0.4 and we'll go over 0.35. Here we go. All right, so that's our all-time high, and obviously as price approaches it again, we'll be expecting a rejection unless price breaks it upward, just like what happened previously. So previous all-time high, rejected it downward, then broke it upward, it's now acting as support, then price broke it downward again. Next, let's go for green because we already have our blue up there. That's how you keep your chart as clean as possible. So if you go lower, you can see many rejections from this area, right? So you can see it was acting as resistance previously, as I showed you. Like now, resistance again, support here, and then price broke it downward, resistance now. Let's go for around number 0.23. And of course, it's an entire area, a zone, and not a laser level, but I'll keep it as a level to keep my chart clean. Next, if we go lower, we can see that we also got another rejection around this area. It was acting as a resistance previously, then support again, rejected this resistance, and then broke it downward, now acting as a resistance area. Let's go for, as you can see, I have my alert here. Let's go for 0.17. Or you know what, 175, and of course it's just like an entire area. Now if you go lower, I can't really find much. I can't really find many rejections from it, just like one here as a resistance, then price broke it upwards, now acting as support, right? But it's not as strong as this one here, and this one where we can find many rejections. So 1, 2, 3, 4. Right, and look at this one, 1, 2, 3, 4, 5 even. This one, like, just we have 2, 1, and then the second one is here. However, it's a very strong one because it's the round number 1 first. Second, it's a demand area, as I showed you previously, as we had an aggressive movement upward from it. It's a rally, base, and then a rally again. Don't know about supply and demand, don't worry, I have a video about it, like 30 minutes video about how to identify the strongest ones, how to draw it, and how to even trade it. You can find it on the channel. Okay, but I will delete this like zone because, you know, to make the chart as clean as possible, but I make an offset for it like this and go for 1 or 11 5. This is it. So look at how clean or how many info we gathered just from weekly time frame by drawing our supply and resistance and supply and demand zones. We've got a demand zone here, and we've got a minor supply here as we had an aggressive move down from it, a supply zone here, and obviously a supply zone here. So as you can see, previously an aggressive movement downward, then price rejected it, an aggressive movement downward, and price rejected it, and so on. Next, let's go for our non-horizontal support and resistance. The way to do it is very simple. We want to find the overall movement. In this case, like I don't need any indicators to tell me that we are obviously overall bullish. We have our first impulse, correction, a bigger impulse, and now a bigger correction. So now we're expecting another impulse like this to result in a new all-time high. Of course, even though we are overall bullish, we don't buy blindly, because we don't want to buy at the end of the impulse movement. We always wait for the price to make a correction and then look for buy stops to catch the next impulse. That's why we don't buy blindly. We always zoom into lower time frames and look for extra confirmation first. Second, we need a rejection zone from higher time frames. In this case, we've got this one, which is the round number 1, demand zone, supply resistance, and we want to identify the overall movement or a channel or anything that engulfs this overall movement. In this case, we've got this trend line here, right? So we can see it very clearly. Rejection, first impulse, second impulse, we can draw this trend line. Now we're expecting this movement. Of course, unless broken downward, then our support will become a resistance and we will be trading lower till around our next support, which is around 0.5, as it's a round number and it's also a demand area, right? So we'll be looking for buy setups unless we have a break below it, then a movement that our next support or rejection would be expected, where we'll be looking for new buy setups. I always like to go for brown for our rejection trend lines. Of course, it's also an entire zone and not a laser level, right? So we should treat it like an entire zone, but I draw it as a level to keep my chart as clean as possible. So that's our lower bound. Now let's identify our upper bound. It's very obvious also, this one here, forming like a rising broadening wedge. Don't worry about the names, right? It's just like two trend lines engulfing the overall movement. That's our upper bound and that's our lower bound. So that's how many info we gathered from weekly. We've got overall movement. We are now in a correction phase, waiting for the bulls to take over to catch the next impulse, a rejection zone, and demand, and so on. Next, when we are done, which is obviously like we already covered pretty much everything, we zoom into daily time frame. Now, chances are that you won't really find anything new from daily because you already like found so much from weekly time frame. But you can see it even better. You can see this support now acting as resistance, right? You can see it like very clearly. Resistance here, support here, again support, broken down with resistance, and lately price rejected it downward. Now it's approaching what? A support area. Just like previously, we'll be looking for buy setups from a medium term or short term perspective because we're around a support area, unless this low and this strong support is broken downward as mentioned previously. So now, but overall bullish from a long-term perspective, approaching a support, we'll be looking for buy setups. That's why we zoom into lower time frames and so on. Now, from a daily time frame, we have like a double bottom pattern forming. That's our neckline, which happens to be around the resistance area. That's why you see my alert here. If price breaks it upward, then the long-term impulse movement would be expected. Just like previously, if you notice, here we go. We've got an inverse head and shoulders pattern, broke above this resistance, which is also the neckline of the structure, and then the impulse movement started. Now, from a market structure perspective, we know that we are currently stuck inside a range. We were currently overall bullish here, prices making higher highs and higher lows, then broke below the previous low and this high here. Then we are starting from here. We are bearish from a long-term perspective. Of course, we could speculate like here and here, short-term correction movements, which we are going to do now. We're looking for bullish reversal short-term ones. Then the bearish movement started from a long-term perspective. That's our first impulse, correction, big impulse, correction, and look at how small this impulse is compared to the previous ones, this and this, which means that the sellers are exhausted. They couldn't push any lower, just like they were pushing before. They couldn't push lower to result in a lower low. Instead, it resulted in a higher low, or now even, as you can see, a double bottom is forming, like, which is an equal low. So for now, at least, unless we have this movement, for now, the bears aren't able to push any lower, but it doesn't mean that the bulls took over from a long-term perspective just yet. For the bulls to take over from a long-term perspective, we need to see a break above this double bottom neckline, which is obviously, which I showed you previously, this one. But I also posted this one on TradingView, that I'm waiting for this to speculate a long-term bullish movement on one. Meanwhile, since price is currently like couldn't push any lower, so we might have like a potential reversal, which will be confirmed here. But for now, we are stuck inside this range. I'll show it to you if you want visually. That's our upper bound, and that's our, here we go, oops, many ones, so around the lower band. That's why we're looking for buy setups. Now if we zoom into lower time frames, we can see that we've got a channel forming, right? So we were overall bearish previously, then price broke above the previous high. Now we are bullish, and price started to make higher highs and higher lows, right? Big impulse movements pushing price higher, small correction, big impulse, small correction, and so on. So the bears failed to break below the previous lows until around this area. So we've got a head and shoulders pattern, which we saw here. Here we go. Right, so that's our, sorry about that. Sometimes I get overexcited. So that's it. So that's our head, left shoulder, and the right shoulder is here. Price broke above the neckline, which is covering the entire structure, and traded lower. Starting from here, we are currently now overall bearish and happens to be rejecting this resistance area, which we saw from daily time frame, right? So rejected here the resistance, rate lower, rejected the support, rate higher, rejected resistance, rate lower. Now what? We're speculating a rejection from it, just like previously. That's why we are looking for buy setups. So if you zoom into H4 time frame again, we can find that we are currently stuck inside this range after this bearish trend, impulse correction, impulse correction. Now we are stuck inside this range, but doesn't mean that the bulls took over yet. We can draw like a channel here, which we can see better from lower time frame. You know what? Let me zoom into lower time frames. So sorry, here we go. So we can draw like a channel here, right? But it's like slightly broken upward, and we've got like a reversal pattern forming. That's our last high, and if we extend it, we can see that it's lining up with the previous one here, right? So this is basically it. Overall bearish, stuck inside a rejection area. We can draw a channel which is broken previously, but from H4 we can see it even better, right? Which is also lining up with these highs and lows here from a short-term perspective. But I prefer that to see another movement lower before we see the break. But we might have the break now, right? I can't really know. We don't predict. We don't try to catch the exact top and bottom. We always wait for the market to make the first move, and then we react accordingly. So this is what I'm waiting for on one, to catch the short-term impulse movement upward. Then if price trades higher, I'll be monitoring the price action here. If a bearish reversal pattern gets activated, I'll be closing my buy, or if price breaks it upward, then our short-term buy would be extended to be a long-term buy. Or you can close your buy here and then wait for the buyers to take over here from a long-term perspective, buy immediately, or wait for the retest and look for a trend continuation pattern. That depends on your trading style, trading plan, risk management, and so on. Okay, so that's basically it. Meanwhile, until the bulls take over, until the buy is activated, one can still push lower and lower, as mentioned many times from daily and weekly. Let me delete these ones to make my chart cleaner. So the bears can still kick in to form one new or like multiple new swing highs before we break higher like this, or even trade aggressively lower and break below this support for it to become a resistance, and so on. Best of luck, and I'll see you on the next one.